Well, here we go. Cooking up another stock live stream. Welcome aboard, everyone. We are just 2 weeks away from the end of the year, which, my friends, you know exactly what that means. That means we are almost at the end of the House Hack fundraiser, which I could not be more grateful for because it is a lot of work to keep pitching and to process people's payments. But anyway, well, welcome aboard. Appreciate y'all being here. So today, we've got some Blue Owl drama that's really smoking Oracle. We got to talk a little bit about the details of this. The Financial Times reported this. So we'll talk about that. You've got some enthusiasm around Waller, which I'm very, 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 very excited about. I was quite nervous that Trump was going to pick Warsh, as you probably saw with my video yesterday. And if you haven't seen my video on Warsh yet yesterday, I encourage you to watch it. Oh, look at this. Isn't that nice? Well, maybe I should... Oops. See, we got to put like a little banner or something. That'd be kind of cool, huh? That's that one. That's that. No, what did I need? A top banner or bottom banner? Yeah, that's what we need. You know what? Let's put it in this one. And see, that's what we need, folks. We need to put the expiring House Hack / reinvest banner right at the bottom. How great would that be? Like this, something like, look at that. We'll do it live. And then I don't have to say it anymore, There we go. Yeah, see how great is that? Then we just put a little banner there and just forget about it. I don't know. It seems kind of nice to me, And then what I really need to do is do like a little what's it called? Button on my little stream deck here, so I could just go, Oh yeah, look how nice that is. Banner, no banner. Banner, no banner. Banner, no banner. Great. We're great. We're good here. Okay, great. So, I keep getting asked about the Japanese rate decision. Bro, this is already a foregone conclusion what's going to happen. I don't really care. It doesn't matter. I'm not trying to poo-poo your question. I'm just trying to say it doesn't matter. It's a nothing burger. What matters a lot more right now is... So it says Waller, I bet on Waller on Robinhood for 50 cents and it's already up 6x. Are you serious? Let's freaking go, dude. Dude, I honestly, I think Waller's gonna win it, man. That's why I was saying in my video yesterday, if I could bet on Polymarket, I would. I haven't tried any other market. I mean, I haven't tried any prediction market. I'm not really a prediction market kind of guy. But here's one I'm pretty confident about. Trump's already flip-flopping on Hassett. You saw my teardown of Waller yesterday. I hate to say it, but if anybody, especially Trump, catches wind of Warsh's history, it makes 0 sense to pick Warsh. Why would Trump do that if this stuff is so publicly available out there? It's crazy. So it's all a little shocking to me, I'll put it that way. But let's go look at this Blue Owl garbage that's going on. This morning we did an analysis on Lemonade in the course member live stream. So we got that all published in our stocks tab. Remember, if you're a course member and you do not yet have the stocks tab, just download the Meet Kevin app, and when you log in with the same email you signed up for the courses with, you'll unlock all of the stuff. All right, so what do we have here? JP Morgan, look at this. They got a whole nice new photo of the new building in New York. JP Morgan. I hate these people, by the way. There's some people that I've worked with at JP Morgan. I know they're good people, but I think the bank is a scam. I think, they throw around their weight like they're they're a big shot, and the service you get is weak compared to any other bank. I've gotten better service, and I hate Bank of America too, but I get better service at Bank of America than I do at JP Morgan. That's crazy. In fairness, credit to where credit is due. Bank of America got me into my first home back in 2011, 2012. It was hell. It was like a 6-month escrow, but it got done. JP Morgan Chase has withdrawn almost $350 billion in cash from its account at the Federal Reserve since 2023 and plowed much of it into government debt as the bank tries to defend itself against rate cuts that threaten to erode its profits. Oh, that's what it's saying. So basically, it's got a bunch of long bonds, and so now, you know, if rates keep coming down, that's maybe why they want Warsh. Maybe that's why, you know, Jamie Dimon, I'm pretty sure, wanted Warsh. Maybe that's why. Maybe this is why Jamie wanted Warsh, because he's pumping his own book. You know, it's like billionaires pumping their own books because they don't have enough money, these scammers. All right, let me go to Jamie Dimon, Kevin Warsh. What bank would I recommend? So I like SoFi a lot for personal banking. I wish they had business banking. You know, Robinhood will be really good for personal banking too as that broadens out. But I personally think if you run a business, and I'm not saying this because I have a link. I'm saying this because I think you get a benefit if you use this. Yeah. This is by far, like, I don't understand. I'm going to tell you, I think they're really dumb about this, but it's so good for you. So business, if you go to meetkevin.com/bank, it gives you this. When you deposit $10K within your first 90 days for a business bank account, you earn $250 in cash. It doesn't matter to me, but you also get $250. So they give you $250, which is kind of cool if you use an affiliate link. But what I love about them is, listen to this. It's so backwards. They charge nothing for business banking. So HouseHack is literally doing, like, you know, thousands of transactions a month, ACHs, wires, all this crap for free. And then they just released their personal banking product and they're like, yeah, that'll be $20 a month for the personal bank accounts. And I'm like, y'all got this shit backwards. So like, as like a human wanting to like arbitrage the best deal wherever I can, you know, I have Bank of America, so I have Zelle and a checkbook, okay? For 99% of business banking, I think Mercury is the best. The QuickBooks bank accounts are good for like auto pay and payroll and stuff like that, but not good for everything. And then SoFi or Robinhood on the personal side. That's kind of where my mindset is. I really think it's also good to spread them out and not be, you know, relying on one entity. Like, imagine you have like a Silicon Valley bank that happens and they shut down, you know, your accounts, like they freeze all withdrawals for a moment. I'd rather be a little diversified. Like, I'll show you this. I probably shouldn't, but I'll show you this. I was looking at our cash yesterday at, where was it? Board meeting notes, HouseHack reinvest, where all our cash is. So these are our actual cash balances, and so I'm just telling you this because I want an affiliate link or whatever bullcrap. I'm just being transparent about, like, we're doing what I'm saying, right? So here's actually, I slapped this together yesterday morning with a spreadsheet. So the HouseHack QuickBooks checking, which envelopes are like QuickBooks checking, but they give you a yield. So this gives you a yield when you put it in an envelope. I don't understand why. QuickBooks checking doesn't. But we like this for like payroll. This is really easy, or property taxes. It's easier to account for that. I had to write a few property tax checks physically, like with an actual paper check. So that's why I know those checks haven't cleared yet. So I just rounded up. I'm like, all right, $500K of property tax is still gonna go through. So I subtracted that off the cash we have. So we really have like 10.4 in cash. I've got 3.4 at LPL. That's the Treasury Ladder account. Bank of America's got like 300K because I Zelle people through that, like vendors or painters or whatever. Mercury, here's that Mercury business checking, and then I just move it to the Treasury account every so often. I wanted to see if I could make a Fidelity account, so I put 5K over there. I think it's just in like a cash account or whatever. And so yeah, anyway, that's the HouseHack cash position. So I think it's kind of cool, because like literally what I just told you is also what we're doing. But anyway, so let's go into this. All that a tangent from like dumping on JP Morgan. Sorry, like as you can see, $0 are at JP Morgan because F them. And I never, like, banks don't like it when you don't take out debt. Keep that in mind. Like, they offered me a plane loan, and I gave them a middle finger because they wanted to give me the worst terms that I've ever seen a lender give. Like, margin calls on a plane. I'm like, are you asking me to sign for bankruptcy in a recession? You know, that's retarded. To let you margin call a plane. That's like the dumbest shit I've ever seen. Sorry, I should stop saying bad words. I'm just like passionate about it. Anyway, ended up, you know, I got a 20-year fixed rate loan somewhere else. But whatever. Now I don't have any loans. JP Morgan, which has more than $4 trillion in assets, slashed its balance at the Fed from 409 at the end of 23 to such $63 billion this year. Oh, so this is why maybe they want to keep those rates propped up a little longer. But wait, I mean, how does this make sense? Because if rates came down, they'd actually be able to against rate cuts. Oh, I get it. So they're dumping the bonds as rate cuts are coming down. I get it. Okay. It's easy to mix this up with the bonds. So I get what they're doing. They're liquidating their treasuries as they're trying to reduce their exposure to rates coming down. Got it. Okay, I hear a lot of screaming out there. Hold on. There we go. The bank increased its holdings of treasuries over the same period to allow it to lock in higher yields in anticipation of cutting. The problem is if you cut a lot, then the value of those goes down. Okay, we've moved cash out of the Fed into treasuries. Okay, well now I'm just thoroughly confused. So this is the cash balance at the Fed. They're pumping it into treasuries. I see. Okay. Fed subsequently started lowering rates. It's clear to JP Morgan it's migrating money at the Fed to treasuries. Rates are going down and they're front running. JP Morgan declined to comment. They don't disclose the duration of these bonds. Got it. Somebody writes, Chase stole $23,000 from me in June because they suspected a check was fraud. It was not. I sold my truck. You don't hate the big banks enough. Support your local SoFi. You still hear them crying? Dude, I have the filter on and you can still hear them. Hold on. Hey! What's all this crying? Get over here, Claire. You want to come in, Ella? Ella, come say hi. Come here. Come say hi. Claire doesn't want to go to school? It's okay, you come say hi. Come here, buddy. You want to come say hi? Come here. Thank you. Come here, buddy. Oh! Look, that's you right there. Can you see you? Yeah. Yeah? Can you say hi? Hi. Can you wave? Oh, you want to play with the calculator? Maybe not the keyboard? What's your name? What's your name? Yeah, are you Ella? Where's Claire? Is Claire crying? Is Claire sad? Anyway, this is Ella. So, are you going to school? A little overwhelmed, huh? It's all right. So this is like our big galoot right here. Oh, be careful with this one because you might turn off my live stream. She is this human. Look at this human. Okay, huge. Okay, huge. Yeah, she is like, I don't know, 99 percentiles in like height or whatever. And it's crazy because we're like, all the other babies are much smaller than her and they're all like the same age. You know, it's incredible. Incredible. But anyway, she's got to go. You got to go to school, okay? Want to say bye-bye? Bye-bye. Bye-bye. Oh, thank you. You're so nice. You're so nice. You're not crying when you leave. You're so nice. You want me to open that for you? Open? There you go, buddy. Bye, Ella. Goodbye. I love you. All right, now we're going to close both doors. All right. There we go. So, okay. Somebody says, I'm filing lawsuit to Chase because they took $58,000 from you and couldn't get it from... Yeah, like I said, you don't hate the big banks enough. Okay, so what are they doing? So it's basically they're moving money from the Federal Reserve account, so basically like money market, right? And they are moving money to longer term treasuries to lock in yields. Okay. They're preparing for an end of what might be easy profits on the overnights. Yeah, that's fine. We know that. Old news. And then you've got scale, JP Morgan was cash in by the Fed, blah, blah, blah. Maybe that's what's removing some liquidity from the Fed. Payments from the Fed to banks have skyrocketed, blah, 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 blah. Yeah, I don't think this is a big deal. Yeah. I don't think this is actually that big of a deal. So it was nice to dump on JP Morgan, but I don't think this is a big deal. Okay, good. So then we have, I didn't mean to do that. I'll get rid of that. Oh, look at that. It like pre-filled a tweet for me. No. All right, what do we have over here? Oracle. So Oracle's $10 billion Michigan data center in limbo after Blue Owl funding. So Oracle's largest data center partner, Blue Owl. Now, has Blue Owl lent to Oracle before? Let's go see. So if I go to Investor Relations Oracle and I go to, let's see here, Q's. We need to get the annual filing here. Okay, so if I go to Blue Owl, no, I don't get owl knowledge. Oh, okay. You can't spell knowledge without owl. Oh, man. Imagine if they used that as a pitch. It would just be the most cringe pitch ever. Okay, Blue Owl. Let's see here. Software Group faces increased concerns about its raising debt and AI spending. Blue Owl has been in discussions with lenders and Oracle about investing in their planned 1 gigawatt data center being built in Michigan, but the agreement will not go forward after negotiations stalled. So this is kind of a rug pull. Oh, are y'all really still on about my shorts? Here, I think I have a link for that. meetkevin.com/shorts. Oh, it's not working. Why not? Shorts? Yeah, my link's not working. I broke my link. That's okay. All right, I'll find them for you. 3-inch inseams. I thought we've already gone through these shorts. These are the bomb. Yeah, look at this, guys. Guys and like the two girls. You ready for this? $18. Bro, $18 with the zipper. With the zipper on both sides. I got a zipper on both sides. I get a liner, and it's $18. Like, next time you go into a Nike store or a Lululemon or an Aloe or some, like, hoity-toity bullcrap, I want you to remember that Kevin is spending $18 on shorts that he can qualify on to get overnight delivery, baby, or same-day delivery. Yeah. And Kevin even gets to choose the color. Like that right there, that's old house hack color right there. Yeah, that's the one you saw. You know, kind of actually matches the house hack shirt. Doesn't really match the whole like Festool setup. But dude, you should see how many zippers I have today. I'm zipper man today. Yeah, giant pocket here for my hammer. Yeah. We're cooking today. We are cooking. Okay. So, let's see here. Best shorts ever. Can't wear those and sit down. What do you... Dude, it's skin. Who cares, man? I think people get so nervous, like, oh my gosh, people might see my thighs. Who cares? Like, people are dying in Gaza, and you're worried about your thighs. I don't know why I'm making that comparison, but because I think it actually is pretty accurate. It's like there are bigger things to worry about. Private Capital Group has recently been the primary backer for Oracle's largest data center projects in the U.S., investing its own money and raising billions more. Blue Owl typically sets up a special purpose vehicle. Right, this is how it ends. It's like when financing stalls. Remember that BNP Paribas thing? Okay, so this I talked about this in the video yesterday. The BNP Paribas thing was this right here back in 2007, and what it led to, or right here, this was the post from Kevin Warsh in 2018. Right here, look at this. The sleepy complacency of a bygone era seemed rudely interrupted by a liquidity shock last August. A global margin call on virtually all leveraged positions began. As you know, the Federal Reserve found it necessary to begin exercising monetary muscles in unprecedented ways, blah, blah, blah. The plot thickened, blah, 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 blah. Right? All about liquidity and liquidity drying up, right? So I think that's very interesting. But this Blue Owl thing is a problem because this is exactly how crashes happen. So let's write this down. Let's go. Okay. 2007. Liquidity dries up in August 2007. Okay, that's when liquidity dries up, and so you have Fed panics to save liquidity. In early 2008, Fed doesn't do enough. Is too late because they're worried about inflation. And then what happens? Then Lehman collapses and the entire fate of the US financial system is at risk, right? So, like, I hate to say it, but, like, this is what's happening now, okay? This is happening now, okay? I hate to say this, this is happening now. Do you see the pattern? This is house hack OnlyFans? Oh my gosh, no. I buy houses, I like running. Although I'm still injured, I can't run. I haven't been able to run since the end of September. So instead, I've gone to the gym. That's the first time I've ever done that, because I usually just run. Anyway, Larry Ellison's computing giant has deals to supply computing power for these data centers. Computing giant has deals to supply computing power from groups like OpenAI. The breakdown of funding discussions leaves financing. Well, I mean, I think what we should look at is let's understand a little bit more context around. Ooh, swimming would be a good idea. The problem is I don't want to go to a pool. That is actually a good idea, though. Go swimming. I need a pool. HouseHack only owns 2 pools. We own 1 elevator and 2 pools. I don't know why this matters. Okay, let's look at Blue Owl Financial Times credit group. So let's see that failure. Where was... I want to see... Oh, Blue Owl is now getting sued. Blue Owl calls off merger of private credit groups, and now they're getting sued. Wow, really? Look at this. Fararku and Fararki encourages investors who suffer, so they're doing a class action against Blue Owl to discuss your legal rights. The company's Blue Owl was experiencing redemptions, business development company redemptions. That, as a result, the company was facing undisclosed liquidity issues. Here we go. Oh yeah, dude, HouseHack owns way more real estate than I ever did. Like, remember, I owned a lot of real estate myself, but I was also leveraged on my real estate, right? I mean, I was only leveraged like 65%, but I was still leveraged. So, you know, I don't know that I ever personally got to 10 mil in equity in real estate. Maybe like close to that. You know, the rest was debt. But House Hack has, I don't know, $80 million of real estate, no bank debt. The scale is insane, because if I leveraged House Hack up, you know, to 65%, so 80 million represent, well, I'll just do 80 divided by 80 would then represent 35. House Hack would have $228 million. You know, that's 10x, dude. House Hack's literally 10x, man. That's in terms of real estate exposure. It's really exciting. And then not even to mention like what we're doing with the AIs. Oh man, our app, it's so cool. We had our board meeting yesterday, and Ross was like yelling in the board meeting because he's like, Kevin, this is what happens when you listen to me and you focus. This app is so much better than I thought it was going to be. He's like, I'm using it and I'm finding deals. I'm like, wow, and it's actually working. And I'm like, oh, that's really nice. Like, we knew it would be good. He's like, but you added things I didn't even thought you would. And I'm like, this is why we wanted to spend on AI. And so the board was really happy, you know, all of them. But anyway, it's kind of funny. The company would, because Ross was always mad at me flying, mind you. He's like, why are you flying? You're an idiot. You shouldn't be flying. He's like, focus on the AI. And so that's what we're doing. It's interesting. But anyway, that as a result, the company would likely be limit or halt redemptions. And let's see here. Positive statements about the company's business were materially misleading. Okay, got it. So they're getting sued. Financial Times published an article that Blue Owl has blocked redemptions in one of its early funds. That's true. I remember reading that when it happened. They did block redemptions. And then they were restricted from pulling money out of the fund until a merger was announced. And then they'll be able to redeem cash or their position at NAV. However, after the Financial Times put that together, that ended up getting called off. That merger got called off. And so, okay, you're getting put in 24-hour timeout. Oh, you're lucky. I don't know why the button's not working. I'm trying to silence this knucklehead who's spamming in the chat. And 24 hours, goodbye. All right, good. So, this was the Blue Owl call off of the merger, right? So here we've got Blue Owl called off the merger between its credit funds after the Financial Times article. So they probably really hate the Financial Times right now. Now, if I go to, there's Blue Owl, and then there's another fund as well. There are a few of them. So there's Owl, I think, Blue Owl, Owl Tech. I think that's one of them. Let me go see, because if I put them up at the top, I'll lose my positions over here. Where is this puppy? Puppy, where are you? So, Blue Owl, Hugo Boss, Palantizzle, there. Oh, I must have clicked on them again. So this is Blue Owl. They've had some recovery here. And this is the main company, not the feeder fund. Where's the feeder fund? It might be Blue Owl Tech. Because this is why Oracle's selling off. So if I go to Blue Owl Tech, yeah, they're still selling for a 19% discount, right? So look at this, 81 cents on the dollar. So now if I go, you know, check the Qs. Oh, wow. Oh, we just lost 607. No! No! Yesterday, we bounced on that line twice, dude. Crap! I was actually excited that we bounced on this line twice yesterday. Look at that. It was so clean, man. It was so clean. Who's ruining it? It's Blue Owl. Blue a-hole. So this all relates. This is all connected here. So Blue scam and the merger getting called off. Planned merger came against the backdrop of rising scrutiny of retail that had taken in hundreds of billions of dollars into private debt with limited liquidity, abandoning its merger of Blue Owl Capital Corp 2. Blue Owl Capital Corp 2. Business Development Corp. And if I grab them here, Blue Owl Capital, OBDC. That's this one. This one's selling for a 13% discount. So it's actually recovered a little bit. You know, it was down as low as 75 cents on the dollar, but it's already starting to fall again. But Blue Owl, they're now rug pulling financing on Oracle. And somebody says, I just saw a Tesla commercial. Yeah, that's funny. Tesla's like, what's the irony? Like in 2022, I'm like, hey, Elon, you guys should start advertising. And then now Tesla's advertising on my channel. It's almost like they're paying me back for my trip out there. And for the suggestion. So this is the fraud alert. Okay, so they're doing the class action. And then we also have the relation to Oracle this morning, which is tanking the market. Somebody writes, Ferrari never advertised. Yeah, well, Ferrari's not a mass market vehicle. Can you check the SPY or SPX when you get a chance? Need your 2 cents? My 2 cents? So, you know, I use SPY, which is the only place I have lines. But I mean, this is what I have. You know, you're at the all-time high. These are extension lines up here. You know, my line on the SPY is where we sit right now at 675. We've kind of got like almost a triple top here. You know, it's just tough right now because cash balances are very low. You know, we're at the lowest cash balances that we've seen since 1999 as a percentage of people's portfolios. So, you know, you're at a sensitive time. I think people get excited when stocks are at all-time highs. But, you know, I said to course members this morning, I go, look, I'm not anti-Tesla, but I wish somebody in 2021 when Tesla was $480, I wish when Tesla was $480 in 2021, I wish I had somebody who grabbed me by the shoulders and had the balls to say, you're a dumbass for not taking some money off the table. It's at all-time highs. It's got a crap load of negative catalyst ahead of it. It is driven by momentum that could be rigged because, you know, Elon's got to pump some money so he can win his fight against Sam Altman, right? So, and you're at the lowest cash allocations for portfolio managers, and you're at a very sensitive state in the economy. I wish somebody would have grabbed me by the shoulders in 21 and said, you'd be dumb not to sell some covered calls or to at least set a trailing stop, right? Like, I wish somebody did that for me. So that's what I said this morning in the course member live stream. It's not to be bearish. It is to say, I wish somebody gave me that prudent advice. I did not get that. And so, you know, I'm just sharing that perspective that in hindsight, I wish I had. And so I would feel bad. That's why I made my big video on Tesla yesterday, because, you know, I want to do what somebody didn't do for me. Anyway, okay, good. Let's see here. Somebody says, can we invest in increments other than 50, 10, 20, 50, 100K for house hack? Sure. Yeah, just email us at ir@househack.com. I mean, people, you know, I mean, we're going to be, I suspect we're going to be well over our largest fundraise ever. I mean, the amount of momentum that's coming in, you know, we're still at $1 million like last, you know, few business hours. That's incredible just because more funding has even come in yesterday. I think yesterday was like 500K alone, and so, then factor in the past couple days. But anyway, or past few days, whatever. I don't know, I have all the numbers in front of me right now. But the point is, there are a lot of people. I think people realize, like, if HouseHack has AI revenues now, which it does, we might not need to fundraise again. And it's like, why? This is great. Like, let's just grow those revenues. And it gives people an opportunity to diversify away from the hell of the stock market. I'm not saying go sell and go invest in HouseHack. I'm not your portfolio advisor, right? But I know that's what some people are doing. They're like, hey, I can invest in an AI company at an August of 2024 valuation before it had AI. Well, we had AI since 2018, but not a product that we were licensing to people. Blue Owl will probably have involved arranging up $10 billion of financing. Right, wow, up to $10 billion of financing. So that's about a third the size of Meta's deal. Can we invest as individuals in HouseHack? Of course. Yeah, go to househack.com, read the offering circular. It's open to non-accredited investors. You don't have to be accredited. Yeah, toodle, cranky or whatever. Your name justifies you because you're cranky and you're like, you haven't shown us. I literally did. You didn't pay attention. Like, if you go to the HouseHack playlist, I literally show the product. I've shown it in our course member streams too, and there are pictures of it at househack.com. Yeah, I think people have to like dump on other. It's sad. You should be happy for other people. Like, we're so happy and grateful that like we're growing and building something here, and we're doing it transparently on YouTube. But, I think sometimes people wake up and they haven't had their beer yet for the day or something. Anyway, Blackstone held talks to step in as a financial partner, and they've not yet signed the deal. Interesting. So Blackstone's trying to get in, but didn't Blackstone close some funds after First Brands? First Brands, Blackstone, private credit bosses hit back at misinformation. First Brands collapse ripples through business development corporations. First Brands, Blackstone was not a direct lender. Okay, so it was just the UBS funds. Okay. So, First Brand collapse ripples through business development companies. Right. Blackstone's gotten hit as well. Look at that. Blackstone's exposure, but it's on the relatively small side. I see. Okay. That's why they're probably all selling off, because that's what it is. It's like some fraud is always like the beginning, like First Brands or Tricolor. They're always the start of it all. So does that mean it is better to invest in HouseHack in 2026? I don't know what that means. Like, you can't invest in HouseHack in 2026 because we're closing the fundraise at the end of 2025, which is in 13 days. HouseHack doesn't pay dividends. There's a yield on a convertible bond. But, that bond, when it converts, turns into equity to give people the upside in the stock. Sometimes when I see questions, like I'll get these questions in email and people will ask questions and it's very clear that they've never done a venture capital investment. And I say to them, I go, you know what, you're better off not investing. Like, just based on the questions you're asking, I would recommend you don't invest. Because I think some people have never even heard of a convertible bond. And it's fine if you haven't, but if you're gonna not do your own research, don't invest, we don't need your money. That's why we're closing the fundraise. We're like, we don't need it. So anyway, the funding turbulence points to increasing strains on Oracle's AI infrastructure, right? So I was talking about this a little bit this morning in our course member live stream. You have to remember that Oracle's growth of 33% next 4 years on average is predicated on them receiving financing. So without financing, Oracle's growth collapses, right? That doesn't make it a bad company, but the entire, I hate to say it, this AI stock market is propped up on growth estimates that rely on debt expanding. And right now we're seeing debt contract with this Blue Owl deal. And that's the problem. The contraction of debt availability. Let's see here. Spending sprees. Shares have fallen 40% from their peak. We know the bonds have sold off. Let's go look at credit default swaps. I'm going to pull that up. It'll take me a moment. People close to the Michigan deal said lenders pushed for stricter leasing and debt terms. Right. So that's what happens. So the lenders start getting nervous and they're like, hey, we're going to need better guarantees. And when the lenders start demanding better guarantees because they're nervous or they're not getting their investments, then the lenders at some point get to where they just say, sorry, bro, we ain't going to do this. So let's see here. Let's see. Okay, let me log in over here. So if I log in, I get this. Somebody's talking, I think you're talking about Oracle here. You don't magically get AI inference capability by buying chips. That's right. And I think that's one of the things with Oracle is like, remember, they're just a hardware buyer. I mean, they do have their software as well, but the big growth of income and net income is supposed to be coming from buying chips, which is being funded by debt. But again, if the lenders are like, nah, man, we don't trust this, we need more debt, or we need stricter terms, that's a problem. Let's look at the Oracle 5-year credit default swap. Okay. Line chart. We're at 150 right now. 150 right now on the credit default swaps. Are you going to leverage house hack eventually, or is the plan to stay debt-free indefinitely? I don't know, because I'll just be transparent here that, like, I think this is very useful for everybody to know. This is applicable to people individually as humans as well. So this is not like designed to be a pitch or whatever. Just saying, debt is great when the Fed goes to ZIRP, zero interest rate policy, and they're going basically QE infinity, right? To prop up, to get inflation at least positive, okay? That's what they did last time. That's what they did in 2010, right? However, debt is bad at ZIRP in deflation, okay? So this is why it's so important. Like, I can't tell you today that I know what I'm going to do as the CEO in 3 years, because I don't know what the conditions are going to be at the time. If we're in ZIRP and we're printing QE infinity and we have like 1% inflation, debt is great. But if we're in deflation, debt is terrible. So you kind of have to, you have to be flexible. You know, you have to understand that the answer is not always to borrow. Wow. Dang, look at that. We actually rejected the 07 line. I mean, that's only on a 1 minute, so, for what that's worth. But, people got mad at me because I think my average sell on NVIDIA, I sent these alerts to people in the course member live stream, but I sold like $2.5 million of NVIDIA. I sold at like 185, 190, 195, 200, 205, and people were like, bro, what the hell? Well, you're donating to the NVIDIA support line, sure. So, people are like, oh my God, it's selling NVIDIA. Like, sorry, bro. I told everybody I'd be transparent about when I was selling NVIDIA. And I sent all those alerts to everybody in the stocks, in the alpha report. You get that over at meetkevin.com. We actually changed the coupon code from Santa. It was, where's the button for it? We were using this coupon code, Santa Reinvest. I changed the name of it to Release the App, because I don't know, I think it's kind of funny. But Release the App because, we're releasing our AI app this month. So it's like, release the app. So we'll kind of like coordinate the releasing of the app with the expiration of the coupon code. But anyway, there are the lines for you on NVIDIA. Really, you really need to hold 164 right now. And I'm telling you, AMD has to hold 200 to keep NVIDIA bullish, but they couldn't even hold 232, man. Like, that hardware is just risk off right now. That's the problem. You know, I put that in the alpha report this morning. I go, the thing to pay attention to is the hardware selling continues. We've been talking about the hardware selling since, well, I mean, for a while, because I've been selling NVIDIA. But last Friday specifically, I'm like, hardware's going down again. Boom, goes down again. Monday, hardware's going down. Boom, goes down. It's continuing. This dead issue, people don't realize, and this is, I think, the thing people forget, is understand this. You know, I feel like this is basic, but I don't think that it's understood. If Oracle is a 0.8 peg today, based on 33% growth expectations, next 4 years averaged each year, and financing stops, then growth plummets, which means Oracle PEG ratio skyrockets, and what looks cheap is actually really expensive. So that's why this Blue Owl stuff is the biggest news of the day. Absent this, there's really no like major crazy news. Debt financing collapse. So let's keep going with this. As a result, the deal was less financially attractive for Blue Owl than earlier projects. Oh, so they have financed for Oracle before. Okay. Blue Owl was also concerned that the Saline Township site might face delays. Of course they're gonna face delays. Like, you could replace the word construction with delay, and there would be no difference. Hey, what do you do for a living? Oh, I work in delay. Got it. I know what that means. Construction. Do you think you can add an estimated monthly rental income per property in the year? Oh, in the app? I don't want to make that promise right now, because right now my big focus is the valuation on the equity side, because we're building our own AI for the valuation side. We've already got the Vision AI pretty good. You know, there's still work to be done on the Vision AI, but the Vision AI is very good. Now we're working the valuation AI, and that's going to be for sales prices. Will I be able to use that same ML tuned obviously to rentals? Probably. I don't know if I can get that done in 26. I'll try. It's not a bad idea. It's not a bad idea at all, actually. Okay, so Oracle says our development partner selected the best equity partner from a competitive group of options, which in this instance was not Blue Owl. Final negotiations for the equity deal are moving forward on schedule. So Oracle says it's not a problem. So, financing deal. Okay, so that was, let's get a head start here. Grasshopper Bank. What is all this crap? Strategic finance. I need recent. I need to see where the recent financing is coming from. They don't say. Digital bond. I don't see anything about them getting financing. Related digital. So Blue Owl's trying to say everything's fine. Let's just see if there's any news. On schedule. Residents raise alarms. Ha 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 ha! Here you go. This is how you get delays. State regulators are facing increasing pressure to slow down a $7 billion data center for the Saline Township, where residents and environmental groups argue would destroy wetlands. Oh, great. Great. Fantastic. Oh, look at that. 1, 2, 3, 4, 5. This is a 7-minute U-turn right here. That's bullish. Even more bullish if we could break 607. Ah. But okay, great. So now you got the locals that are trying to reject this deal. Critics argue about electricity costs, environmental groups, blah, blah, blah. This is going to get, like, yeah, you're going to get delayed on this stuff. So that's interesting, too. Besant says, any concern about Hassett is absurd. He, along with others, would make a good Fed chair. Okay, well, we'll see. Celine? Coming to a town near you? Oh, okay. Can my pension plan investors? I don't think so. Directed IRA does like retirement accounts, but I don't think pension plans can. Select the best equity partner from a competitive group of options. Find related digital, exceptional project. We evaluated our options and selected an equity partner of choice. Okay. Declined to name the equity partner. Right, because they don't exist. A person close to the company says it was in final due diligence with the investor. Oh, watch, it's NVIDIA, dude. That'd be hilarious. NVIDIA? That'd be hilarious. If NVIDIA is now gonna come out and start actually backing the very data centers, that would just tell you the financing is dead dry. If this is NVIDIA, wow, that would be crazy. Oracle is building a site on farmland near the Saline, I guess. Okay, got it. Project has faced issues. We initially refused rezoning to allow a data center, resulting in a lawsuit. Oh, great. Now they're getting sued as well. Oh, this is a disaster. Yeah. Blue Owl has played a vital role in their big data center projects. $15 billion in Texas and $18 billion in New Mexico. The deals are structured so that Blue Owl typically sets up a special purpose vehicle which owns the data centers and secures the financing via third parties, with Oracle agreeing at the outset to a long-term lease. Right. So if it goes belly up, Blue Owl can walk away. That's the whole point. The sooner Oracle is disentangled from American policy, the better. Since stepping out of the shadows, Larry Ellison has shown his true colors. Wow. They're not very pro Larry Ellison over here. Wow. People are dumping on him. The canary in the coal mine or the owl in the data center. Oh no. It's the owl in the data center. That's a good one. Oh, I like that. Okay. Well, let's go get some other, see what else is cooking. Okay, can we get to that line? Let's see, we're almost there. I think we need a banner. Oh, look how sexy that banner is. Okay, so we're almost back to 607. All right. Let's go see what else is news. So we talked Blue Owl, we talked Reserve, Federal Reserve, we talked about that. Let's see here. Warner Brothers urge investors to reject the Paramount deal. Right, so not only is or do they want to go with that, but yeah, here, Kushner's walked back. So this is a good sign that Netflix is going to end up winning. Bullish Netflix, honestly. I know they're taking on debt for it, which I don't love as much, but... So tech slides, hit stocks, bounce from lows. Bubbles are everywhere in the global economy. BlackRock to match Trump accounts. New ways to understand America's doom loop. The affordability crisis is real and tariffs caused it. Okay, so this is Oracle's reply. Oracle said negotiations for an equity deal are on schedule, and it doesn't include Blue Owl. Right. Okay, that's the related digital talk. Financial Times already updated us on that. So we already got that. All right, so what do we have here? Look around, bubbles are everywhere. Valuation of AI companies, they're expected to spend 1.6 trillion annually on data centers by 2030. Right, and that's what's propping up the forecasts, right? Let's see here. The idea of missing out on the next big play. We were definitely still in the irrational exuberance stage, bubble or nothing, a bubble. But I wonder if the question may be too narrow. If you define a bubble as any phenomenon, the worth of certain assets rises unsustainably beyond desirable fundamental value, then bubbles are pretty much everywhere you look. Yeah, sure. A lot of stocks are very expensive. Yeah. Bubble may be in gold. Sure. Yeah, it all goes down once you go into a recession. Trump and Melania coins. Well, those were a scam. Now we're talking about a protein bubble. Okay. All right, whatever. Okay. Next, affordability crisis. President Trump traveled to Penn to double down on his economic message. The affordability concerns of Democrats is a hoax. Yeah, that's not going to be very popular for Trump, honestly. Yeah, that's not great. Rolex says SPY low of the day. Oh, look at that. Couldn't do it. Oh, boys. Buckle up. Buckle up. When's it beer o'clock? We can't take the selling anymore. It's not unusual for presidents starting their terms to attribute economic troubles to their predecessors. Fair enough, but Trump has the approach to blame Joe Biden. Yeah, I mean, honestly, it's getting a little old, the whole blame Joe Biden argument. And it's just not going to be popular. It's not going to resonate with voters. Yeah, so, the Wall Street Journal had a good piece. I think it was the Journal yesterday on rent control. Wall Street Journal rent control and how, dumb it is. But we already knew that. The Twin Cities. Yeah, here it is. I thought this was a really interesting piece. So they gave, we saw this in Austin versus New York, right? Where Austin values have plummeted because there's no rent control and you can build. In New York, there's rent control and prices are high. So here they do an example of St. Paul and Minneapolis. I read this story yesterday, and they basically said in 2022, St. Paul enacted one of the strictest rent controls in the country, capping rate increases at 3%. And so what happened was St. Paul went from actually doing a lot of construction to basically doing no construction. All of a sudden, it's all Minneapolis construction. So permits to build apartments in St. Paul plummeted by 79%. Real estate investment activity froze. Developers halted new projects. Property values declined as investment cooled. Rent control almost always does the opposite. And, I don't think, I actually left a comment on the Twitter post of the Wall Street Journal when they shared that article. And let's see here. Where was my response? Here it is. This was my response to this article. So, St. Paul enacts rent control, housing construction plummets. Next door, they boomed without rent control. And then so I wrote, government is incentivized to refuse to accept it is the very problem it's trying to solve. You got to get the government out of the free market. And then you could actually have a fair valued market, and you don't need rent control. So it's kind of remarkable. But, maybe one day people will finally understand. But, all right. So, bad day for DEI. Why is that even on the top of the Wall Street Journal? I'm not clicking on that. I'm not giving that a view. Spooked by AI and layoffs, white-collar workers see their security slipping away. Right. That's probably related to layoff expectations. Let's see here. Trump orders blockade of Venezuelan oil. Why $10,000 bonuses for air safety, air traffic controllers are backfiring? IRS takes a new shot at Meta's Irish tax strategy. I want to know what the Irish tax strategy is. Let's go find out. Tell me about the Irish tax strategy. Yeah, just for asking for a friend, what's the tax strategy? The IRS is mounting a novel attack on Meta, seeking $16 billion in a move that extends a decades-long fight. Decades long. The IRS says Meta booked tens of billions of dollars in profits in Ireland that should have been taxed in the U.S. Oh, I see. So they just rearranged where they put the profits. All stemming from 2010 transactions and an Irish subsidiary. Oh, this is old. How much can you bench on the flat? No cap? Like 25? Total? No, I don't profess to be a gymnast. First lawsuit yielded a split decision. Okay, I don't really care about this. This all goes back to 2010. All right, so then we have why these are bouncing. Okay, after the government pledged $10,000, federal agencies said the awards would qualify for 311 unionized controllers out of a workforce of 13,000. Recognition should bring the workforce together, not divide it. So the unions are pissed. And now it's turning into a debate. Canceled their trips to save money. 26-year-old said, it makes me happy that I did cancel my leave. Boost of morale internally shows recognition. Right, okay. All right. Whatever. So the unions are pissed. I mean, when is that? Isn't that their job? Isn't that the job of unions to be pissed? Oh, wow. We really can't hold it up today, huh? Oh, damn, bro. CoreWeave's round tripping, man. Yeah. You know, there was a big piece, almost like an expose on CoreWeave, which, remember, NVIDIA bails them out at $40. But let's go to Wall Street Journal, CoreWeave. Arizona City rejects data centers. Hold on, what's this?
I certainly have an aversion against preemption. So really, depending what regulation looked like, I mean, the cost of power is certainly more expensive. If natural gas pipelines come to Arizona, that will have a cost to it. There's other resources that we've pretty much maxed out on. If NMRs, the small modular nuclear, or the expansion of other nuclear power comes, that's in the play, but that's a bit out there in terms of the future.
Well, you can understand why the street's so interested in Chandler, given the implications if this thing starts to happen with more frequency. But really appreciate you having you. Please come back, Mr. Mayor. Thanks.
Be honored to be here. And thank you. Happy holidays and have a great day.
Same to you. Kevin Harkey.
Okay. Oh, it's Sarah. That's more pleasant to look at than this. What's the news alert?
Cash room at the Treasury Department talking about those new Trump accounts for American children. But at the end, he took some questions from reporters in the room. I asked him about the Supreme Court challenge to the administration's tariffs and whether or not the administration is prepared to issue refunds to American companies that have paid those tariffs during the course of the year if the Treasury Department loses in court.
Well, yeah, we already know this is old news. How many reps and sets? No Diddy. 4 sets of 12. Bar only. Well, you gotta put a little bit of weight on. Anyway, largest new breed of companies driving the artificial intelligence boom has seen 33 billion vaporized in 6 weeks. Share price plunges about worries over an AI bubble. Over the summer, heavy winds and rains caused a 60-day delay in Denton, small city north of Dallas, preventing contractors from pouring concrete. Oh, that sucks. 60-day delay, can't even pour concrete. As a result, the completion of the huge data center has been pushed back several months. There were additional delays caused by revisions of the plans. Right. The slowdown was compounded by mixed messaging from CoreWeave's CEO, spooking investors. Wait, what did he say? What was the mixed messaging? Let's go find out. All right, let's see here. CoreWeave. Yeah, that's the argument that somebody say, Blue Owl didn't back off. They were rejected by Oracle. Yeah, you must be knee-deep in Oracle if you believe that. So the same financer that that Oracle has used twice before. Oh, no, we actually, you know what? We don't need them. Oh, nice story, bro. Come on, man. This is bullshit. They're lying through their teeth. All right, let me get this document. All right, this is the CoreWeave earnings call 1217. Okay. CoreWeave. Open with. All right, so what are they complaining about? So let's see what they say about financing. Financing. Okay, here we go. CoreWeave has established itself as a leading AI cloud and leading innovator in financing and infrastructure. Right, sure. Yeah, sell it. Okay, pitch it, bro. Other than payments related to OEM vendor and self-amortizing debt, we have no debt maturities until 2028. You know, that's around the corner, homie. Okay, and I want to be clear, this really does represent an incredible, disciplined way to finance a company. We think, wait, what is this? Just to follow up for a moment, extremely excited because the contract allows us to do is provide infrastructure to emerging companies. Is this with NVIDIA? So you see this NVIDIA contract in our revenue backlog. We're extremely excited about this. As we provide infrastructure to emerging companies and startups that are struggling to get access to compute. And so the interoperability, blah, 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 we think it's a great structure. CoreWeave's broader offering, it's a deal with NVIDIA. They fully underwrite the economics because we sell the compute to them. And I want to be clear that this represents a disciplined way of financing the compute in order to reach parts of the market that would have been unable to be reached. So basically, CoreWeave is saying we're underwritten and backed by NVIDIA, so our financing is good, and therefore we can buy more NVIDIA chips. Got it. Yeah, not circular at all. Somebody says, bought BMNR at 40, sold at 50, just by Ether. Yeah, I think you should be really careful about those treasury-style companies. I think there's a chance they go bankrupt while the underlying cryptocurrency actually doesn't. Innovation on the financing side. You know, I always get nervous when people say this. To me, that's like, hey, we need to innovate more fraud. I hate to say it, right? But financing shouldn't require innovation. When you need innovation on financing, it implies you're running out of available debt, right? like think about this. If you could get 30-year fixed rate mortgages on data centers, okay? Just saying, from Fannie and Freddie, would you need to innovate financing? No, you'd be happy, right? So like, this is when they get into this like creative accounting or like anytime you hear this, I just think of it as scam. Creative or innovative financing equals very high risk, in my opinion, right? Very, very high risk. We've created a lot of different structures. See, that sounds bad. That doesn't make me feel good. We'll choose whatever is cost effective in scaling, whether it's leasing. We've seen different structures. We believe we're going to explore the full suite of those. Right, because you have to. We don't sign customers without knowing where the financing is going to come from. Well, that's why you have NVIDIA trying to, backstop this crap. Diddy aside, thank you for everything you do. Bought the course and I'll invest in Househack after I sell the Qs. You made day trading less stressful. Oh, thank you for that. Well, I appreciate you saying that. Good for you. And we appreciate you. Okay, so yeah, I mean, to me, like, I get it. These comments don't sound great. So CapEx. What about debt? Any debt? Let me talk about debt. We expect interest to rise, driven by increased debt, of course. We know that. That's old news. No, they don't really want to talk about debt. What about delay? Delays in PowerShell delivery with data centers. The delays are temporary. Maybe. Maybe. Yeah. All right. So, I mean, I kind of get the picture here. I think we understand. So, it's a crazy downtrend there on the Qs, huh? SPY. Oh, that's interesting. I'm gonna have to look at that. Okay, then I've got NVIDIA still at low of day. We're about to lose 200 on AMD. Oracle's trying to recover. And look at these other plays. Like, Target isn't down that bad. Six Flags, Enphase, Dave & Buster's, Netflix. These guys don't care. Wow, Tesla's down 2.3. Look at that. We had a pretty aggressive sell call on Tesla this morning. Bitcoin. I think this was Michael Saylor buying right here. And so this is going to be another example where Michael Saylor is going to end up reporting next week, I bought Bitcoin at an average price of 90,000. And then people are going to be like, bro, what? It's at 86. Yeah, no, Blue Owl has killed the schlog on the Qs, huh? That is definitely more aggressive. Because, my thinking was that we'd get a broadening out, that hardware would do bad. But hardware's doing so bad, it's dragging, the Qs down heavy right now. Well, because think about it. AMD, NVIDIA, Oracle, these are big names. It's kind of disappointing. But otherwise, look at this. Intuit's green, UiPath is green, Axon's green, Ubiquity's not down that much. These are great plays, by the way. Big fan of some of these names. Let's see. How's Hood doing? Hood's at 120. Hood gets pretty aggressive in how it moves around. Ethereum. Oh, Ethereum lost 28.75. Like I say, if you want to bet on Ethereum, buy Ethereum. But this, what is it, BMNR or whatever? I can't help but think this is just like financial engineering. I don't want to go as far as calling it like fraud, but if you think about it, this company provides no value. Like, if you want exposure to Ethereum, buy Ethereum. But why are you going to pay the suits millions to tens of millions of dollars in stock comp, and they do nothing? You know, like, I think that's a scam. Like, I think alts for sure is a scam. Like I said, there's my trend line or my support line on alts. You know, we're getting there. Somebody says, nice video about Saylor, made 6 figures shorting MicroStrategy since September. Price impact, he can't sell Bitcoin. So oh, that's true. Yeah. So even though his cost base, what you're saying is, even though his cost base is at 75, if he started selling, it would tank well below 75 even more rapidly. Yeah. So go stake the Ethereum yourself. What do you need to pay them all the stock comp for? How hard is it to stake it? You know, that's always what I think is funny, is when a business is built on no actual value that it's providing, it ain't gonna last. It's gonna close and collapse. Wow, look at that. We are now trending back towards low of the day. LOD. Okay. So let's see here. So we talked blue. What do we have here? This was CoreWeave. CoreWeave's business model involves using high interest rate debt to buy thousands of advanced chips from NVIDIA. Yeah, the F-35s had problems. Installing them in server racks inside data centers, at least from third-party landowners renting across chip. Okay, fine. As capital spending is intensified, which is 7% owned by NVIDIA and backed by hedge funds, become the standard bearer for both the promise and the risk of the AI boom. CoreWeave plans to rent those chips. Denton data center. Yeah. Let's see what people are commenting on this. Oh, yeah, and then there's Colossus, of course. Elon's swamp project. Let's see what people are saying. Do you own any crypto? Nope. We work with chips. That's a good one. WeWork signed long-term leases of 10 to 15 years and were given 2 to 3 years free. They lost money, but cash flow looked good, so they kept expanding. CoreWeave, even with an unrealistically long depreciation schedule on their chips, is barely breaking even. With debt interest, they lose tons of money. If they stop growing, all they have is a failed business model. CEO has sold about 100 mil of stock this year. Their biggest investor has sold billions. Magnetar. Pump up the stock and exit to retail traders. Works every time. Wow. Wow. Okay. Fraud at Tricolor. Not a surprise. Shares tariff reductions alienate ranchers. Home Depot is the front of immigration raids. Well, we all know that. That's not news. Why is it news? U.S. prosecutors, Tricolor. Yeah, if we really lose 607, next line's 595. But it seems like we're slowing a little bit. How are liquidations doing? So let's go to CoinGlass liquidations. They're actually not terrible at the moment. These aren't that bad, these liquidations. In the last hour, we've got about 138 mil wrecked. Last 4 hours, 280. I mean, I've seen much worse days than this. So, okay. Okay. So, credit default swaps still at 150. Let me go see what the suits are saying. Sometimes the suits have something interesting. Not always, but sometimes. So let's see here. The suits are saying, here, we'll look at the cues in the meantime. Okay, file the cues. 20-year sale had enough concession to draw demand. Oh, what are yields doing right now? Let's look at that. So let's go to like the yield curve quickly. CNBCs, we'll go to the 10-2s at 66. So 66 on the 10-2. And then bonds themselves, still 4.16, still elevated. Okay. Okay. Data center drama turns AI from equity cushion to drag. Okay. Let's write down some of this. Okay, AI. Oracle and... So here's what the suits are saying. Let's write this down. So it says here, Oracle's latest data center drama has opened AI CapEx angst and bled into the wider market, even though it looks more like a blue owl problem for Oracle. Okay, so basically, Oracle says everything is fine with Denton. Was it Denton? Oh, I have too many tabs open. Oh, I got it right. I got the right tab. And then look at those shorts. Oh, yeah. I got to put those away. People are going to get the wrong impression here if I keep that up for too long. Okay, so Blue Owl's Michigan data center. That's what it is. So this is, oh, that's right, the Saline. Everything is fine with Saline Township, Michigan data center. They argue that they have, other developers have other equity partners. I'm guessing NVIDIA. If NVIDIA, that's like lender of last resort. That due diligence is still being done, right? DD still in progress. Blue Owl has provided financing before, but bailed on this deal, which is also facing environmental concerns and lawsuits. Now, Blue Owl has previously financed the 2 Texas projects. Let me get those Texas numbers here. So, yeah, it is 15 bill. Blue Owl did 15 bill for Abilene, Texas, with Oracle. Blue Owl did 18 billion for New Mexico with Oracle, and then obviously, also the Meta deal. But, so seeing Blue Owl bail now is odd, right? Odd that a once reliable SPV lender is bailing. That's the concern here. And then if I go to, let's see here. So it says here, keep sparking, de-risking, and growing headwinds. AI CapEx wobbles. Right, and remember that right now, Oracle CDS now at 150. Now, what were the CDSs? Let me see. CDS, search for this. Oracle CDSs were... CDS. 134 the last time I looked. No, I thought they got up to like 140s. As of December 12th, they were at 134. 134.48 as of DEES 12, and 128 DEES 2. Okay, all right, whatever. All right, so Oracle, the owl in the data center. It's so cringe, but it's so perfect. It's like the dad reference. You know. Okay, so data center. Okay, this is what AI trade. Oh, here we go. Fresh AI fueled pressure in stocks underscore a shift for the next leg of the AI trade. Far more volatile than broad one-way rally of recently. Two separate AI-related stories in the early session point to one common risk: exposure and OpenAI. Right. I mean, before I keep reading that, I just want to show this tweet here. And then also on, let's see here. Let me write this down. Or so schlag if it was very okay. One sec. Let's see here. There we go. Okay, that's done. Okay, good. So this is the tweet that I wanted to. I thought I had it. Where was it? Oh, yeah. This right here. Okay. See, unpopular opinion. OpenAI is running on fumes and will promise to use anyone's chips in return for an investment. I hope I'm wrong. Sam Altman has the power to single-handedly hurtle us into a recession. And somebody replies and says, don't you think if it was running on fumes, it would just scale back the free versions to save on costs? But the problem with that is if you scale back on the free stuff, then, and like you basically limit how much you give people for free, your user growth is going to plummet and your ability to continue to finance will plummet. Which, you know, this individual acknowledges. They end up saying, at the same time, a few insane private fund rounds for various AI companies. They could be raising company until they hit the eureka moment. Well, that's the hope. Especially with I don't think there's going to be a eureka moment. That's the problem. You know, I think people are spending like there's going to be artificial general intelligence, and it's cooped up. Trade Desk. Yeah, Trade Desk is an interesting one. I turned bearish on Trade Desk in January. It was like $100 back then. And the reason I turned bearish on them was because people are escaping using these companies, and they're just setting up the data themselves, or the AI ad platforms themselves, in part with AI. I hope they can turn it around. You know, they're actually a company local to me where I live, and so like it's good for our local economy if Trade Desk does great. But anyway, okay. So what else are the suits saying? So then it says here. Okay, so two separate AI-related stories hit. Oracle shares on concerns that data centers may not be on track, begs the question of what happens if OpenAI doesn't get its hands on the computing power necessary to fend off the competition. It also raises the risk of what happens if OpenAI doesn't reach revenue targets, right? So, like, this creates multiple risks for OpenAI. So the risks, basically what they're saying, are if, you know, so we'll say Bloomberg, if OpenAI doesn't get chips because of delays at Oracle, because of delays in financing, then OpenAI growth stalls, which hurts the 1.4 trillion in commitments, right? So that's the problem with the circular nature of it all. But the second thing is, if OpenAI doesn't stay ahead of competition, it might not be able to pay its bills as new financing for OpenAI dries up. Right. That's a problem. Let's see. Reversal in SoftBank, OpenAI valuation. Let's see, $10 billion investment from Amazon and OpenAI, therefore increases the tech giant's vulnerability to these worries. Right. So people think that could be a reason why you might see Amazon stock actually get hurt. It's Oracle, that's the ultimate AI stock. I've often compared the AI theme to a gold rush because in each case they represent a boom that offers untold riches for some and bitter disappointment for others. The market's relevance to the analogy is that real winners are the purveyors of picks and shovels, or in the case of AI, the chips that power the data center brains. NVIDIA has ridden that idea to become the largest and most important firm in the world. The prospectors, however, aren't necessarily looking so rosy, or the prospects. Right. For Oracle, it's most interesting because its cash flow has already turned negative, necessitating its reliance on borrowed capital. Exactly. That's the thing. Like, this Blue Owl story matters because their cash flow is negative, right? So Blue Owl story really stings because now Oracle is cash flow negative. You know, I actually think that like gold and silver and the squeeze that you're seeing is pretty typical before, I hate to say this, but you usually see that before like a big crash. I mean, let's go fact check that, right? So let's look at gold prices over time. St. Louis, let's see if I can get there. Gold, the price of gold. No, I don't want a volatility index. I want the price of gold. Producer price, export price, non-monetary gold, import price. Bro, I don't know. Just give me the price of gold. All right. I'm just going to pick one. Gold ore. Okay. So what's gold ore? Well, gold ore is different because we don't know what the concentrations are. End use, non-monetary gold. All right. This is maybe use. Wow. That's insane. Look at that spike. So I guess you really only have 2008 as an example, where in 2007, after the BNP Paribas crisis, all right, let's just look at like a different gold chart. Let's go to CNBC gold chart. Gold. All right. Okay. So no, it's actually interesting. Dude, I mean, that chart is just insane. Oh my gosh. But anyway, so 2008, no, you didn't really see much of a decline. You did a little bit. In 2007, during the credit crisis, you had the early fear. You did stabilize in 2008, but then the money printing began and we resumed its run, right? So that's very interesting. It's very interesting to see the first spike in the private credit crisis of 2007. So let's write that down. If we jump into here, arrow. So if I go here, this is when you have private credit fears, which is what we have today, right? So this is the private credit panic of 2007, right? Can I convert my 401k over to house hack bonds? If you want to invest in house hack, read the stuff over at househack.com. But if you need to use like a retirement account, look up Directed IRA. You know, they're the company that has been servicing a lot of people doing it. You know, I don't know. I've never used them, but a lot of people use them. So we just mentioned that because it's the only company we've noticed that does that. But let me go here. This is basically QE right here. That's when QE1 started. So gold ran on QE1 and on the private credit panic. You know, we're now seeing a private credit panic again. So it's probably worth noting that. Private credit. private credit panic of 25. All right. So that's really when we've seen gold yeet. In fact, if we go in a little closer, yeah, some of the recent spikes were over here. September and October. That's very interesting. Okay, so then moving back over, wow, the Qs keep selling down. Well, that's a bummer. Okay, let's see what else we have. So that's silver. Let's go back out of that. Okay, AI trade 2.0, volatility in Oracle, data centers may not be on track, raises the risk of what happens if OpenAI. Okay, we answered that. AI's hidden. Okay, that's fine. Oracle is the ultimate data center stock or AI stock. We saw that. Oil glut will ensure gloomy price outlook for 2026, but that's good because we want oil prices to be down. It gives people more money in their pocket. Big fan of that. Huh. Okay. And then really, yeah, I mean, the biggest news is the Blue Owl situation with Oracle. And it seems like the market just continues to push that story right now. Treasury's pair decline, dovish comments from Waller. What did Waller say this morning? And then the founder of Tricolor charged with fraud. That's not a surprise. What did Waller say? So Waller this morning said Treasury's pair declines after Waller reiterated his dovish views. He says the labor market is very soft. Okay, let's do that. Let's write down a little bit of what he's saying. So Waller, at the same time we can kind of keep our eyes on the cues there. Waller, labor market, very soft. Okay, what else did he say? He said rates were still as much of a percent above neutral. Oh, wow, that's bullish. Rates still potentially 1% above neutral, so 2.5%. That's cool. Okay. Kevin, what do you think about the thought of the market initially selling down on Trump tariffs being reversed because they don't know what the policy is going to be? Well, I disagree with that trade because I think if the Supreme Court rules, they're going to kill they're going to kill all avenues for tariffs. So it's not going to be one of those, oh, well, what if he picks something else? Like the Supreme Court's going to rule on that and they're going to kill that idea from the get-go. So I'm not really concerned about that. I actually think it would be exceptionally bullish if the Supreme Court says you need Congress to pass tariffs. Because if they do that, we can basically guarantee we're not going to have tariffs. Because people are just not going to vote for that. Congressional folks. So I'm not really worried about that. Okay, cool. So let me see what's done. What's going on with this? Let me just close this really quick. That's fine. That's fine. That's fine. Okay. There we go. Okay, perfect. So let's go back to Waller for a moment and just see what else he has for us. So Waller says, Waller's expected to meet Trump on Wednesday. Unless inflation rises, the market is likely to accept a dovish outlook, fueling lower yields. Wall Street Journal interview. Trump named Warsh and Hassett as the top. Right, but that's when I said the market would sell off on the fear of Warsh. That's actually it from the Fed, so that's not really news. Huh. All right, well, that's that. Okay, so let's go look now. Yeah, it looks like we're still getting whacked on the Qs, honestly. That's not ideal. Yeah, the other issue is this stuff is self-fulfilling, right? The more these private companies see stock values go down, the less money there is. And the money just evaporates. You know, people think that when stocks go down, the money has to go somewhere. You know, if you lose $500,000 because you were too greedy to take some profits out of Tesla and go diversify into something else, then that money disappears. It doesn't go anywhere. It just poofs. You know, that's obviously that's a problem. Okay, all right. So I think what we could do, well, let's see what the suits are saying, and then we might try to summarize this. Oh, there is the white collar article we wanted to look at. So the white collar article was here. Let's take a peek at this. So, spooked by AI and layoffs, white collar workers are no longer safe. Ominous sign. Corporate layoff announcements and chief executives warning that AI will replace workers. Unemployment rate picked up. Hiring in many industries that employ white-collar workers has softened. Yeah, we know that. Fears about the job market contributing to widespread pessimism about the economy. Sentiment is near historic lows. Americans are buckling under almost 5 years of persistent inflation. Right. College-educated aren't insulated anymore. Let's see. Americans with bachelor's degree or higher put the average probability of losing a job at the next year at 15%, up from 11%. Ah, okay, that's the current data. Okay. Let's see if the suits have anything. Yes, or we did these suits. Let's go see if the big Wall Street banks have anything on this today. Some talk about the Oracle deals. Or anything for that matter. Okay, today is the 17th. Let's jump in. T.S. Lombard's got something to say. That's on UK. I don't really care about that. Let's see here. SocGen, Precious Metals. Rabobank literally has an article called Kevin! Okay, well, you know I have to open that. That's hilarious. Kevin! With Christmas approaching, Home Alone offers a fitting image. From Home Alone. Realize she's left her son behind. Kevin Hassett, fast climbing towards, resembles such a flight. Strong ascent, nice tailwinds. Then a moment of doubt. He's flying too close to the sun. Yeah, no, you're actually wrong. Somebody just donated. So this is actually kind of entertaining. Tony just donated $10 to me to say, Kevin, you are so wrong. Money does not disappear. For every one seller, there is a buyer. If you lost money, that means somebody else gained money. Okay, that is a fundamental misunderstanding of how order books work. And I'm about to make your $10 disappear. Oh, wait, your $10 have already disappeared from you. Thank you for that. But, and I actually appreciate you donating, because I think the reason you donated is because you're open to being wrong. So I appreciate that, Tony. Tony, I appreciate you plastering your face with such an incorrect comment. But here's how this works, okay? So let's say we have an order book on Tesla, okay? Let's say you have $1 million of Tesla stock at $480, okay? Now, let's say some, let's say, to be extreme, everyone stops buying until the price is 350, aka the order book has changed. Okay, there are no buyers until 350. Now, one guy goes to sell $50,000 of Tesla at 350. The trade transacts at 350, you know, because there could be some shock, right? Like some shock, bank failure, liberation, whatever, right? The trade transacts at $350. Now, $50,000 has gone from matched buyer to seller. Okay, so that $50,000 did not change. That did not disappear. But dear Tony, what happened to the schmuck that has $1 million in Tesla at 490 or 480, right? Well, this schmuck is now going to see their account go down 27%. The $1 million schmuck sees their wealth go down 27%. Where was the matched buyer? Matched buyer and seller. But Tony said money doesn't disappear. Actually, it does. The same way money gets created on the way up is the way you could see your wealth evaporate and literally go nowhere. Nowhere. The money goes nowhere. Just like it gets created out of thin air, it can get disappeared into thin air. So therefore, Tony, thank you for the $10, but we have just disproved you with facts and logic, and that should scare you. But, you know, that doesn't mean don't, like, but on the flip side, you know, when markets are good, it's great because you make money out of thin air, right? So, I'm going to save that as the Tony is wrong piece. Anyway. And it's gone. Exactly. Somebody says free Tony. So, anyway. Okay. All right, so let's now, where were we? Somebody says, poor Tony, he's learning how fragile the market can be. Oh, I say that. Poor Tony. You know what we can guarantee is Tony is down $10. All right. So, okay. So Tesla down 2.9, Q's still down. Damn. Okay. So where were we on this article? Okay, so high visibility, Kevin has said. Media reports suggest the field is open again. Warsh is running. The question about whether Kevin represents... Warsh does not represent an upgrade. Make poor Tony the next coupon code. That's funny. That's funny. Should we do that? Do we need to make a Tony coupon code? I think that would just be mean. We shouldn't do that. You know, that'd be mean. Okay. Coupon code, stop. No. All right. So Warsh's record is at odds with the policy agenda of the White House. As governor, he pushed for rate hikes as the economy plunged into recession. Everybody wants a Tony coupon code. All right. Oh my God. Why am I? This is so mean. Guys, I'm sorry. Tony, I'm sorry. Oh, man. Hold on. Okay, so release the app. All right. So this, you'll have to delete the coupon that's there. I'm going to set it to today only. Okay? Multiple use. I'm going to set it to today only. It's going to be 1% better. So it'll be a little better. You know, I'll be generous. I'll make it 2% better. Don't tell anyone, okay? It's just for us on the live stream. I'm not pitching this in a video or anything. So just for us on the live stream, I'll set it a little better. Okay, coupon code. Let me see here. Coupon code. Tony still loves me. He gave me another $10. You know what? That's a W. That's a W for Tony. That's a good man. That's a good man. W Tony is the coupon code. Coupon code is W Tony. We'll make it expire. I'll make it expire in 2 hours. We don't need more than 2 hours. There. So it'll be win Tony. W Tony is the coupon code. Okay? So we all love Tony now. So let's see if I could do this right. Let's make sure it works at both places, and then we'll actually do our summary here. So if you go to reinvest.co and you go to get lifetime access on the AI, let's see if I actually did it right. And if I go to join now on the Meet Kevin membership, join now, let me see if I can apply it. So you have to remove, you're gonna have to remove release the app. So you have to remove release the app, and then you'll have to apply W Tony. It's just W Tony. Yeah, it works. It works. So it works on Reinvest AI. You could put in W Tony, and then you'll have to do the same thing over here. Delete release the app, and then put in W Tony. Okay? And applied. All right. Coupon expires. Oh, I put 2027. It's supposed to be 2 hours. So I'll go fix that really quick. Coupon expires today, 2025 at 11:29 a.m. Okay, so that's 2 hours and 20 minutes. There we go. W Tony. Let's go, Tony. Okay. So, let's go, Tony. Okay. So, Americans with bachelor degrees or higher put an average probability of losing their jobs in the next year at 15%, up 11% from a year ago. They're also growing more pessimistic about their odds of getting laid off. Okay. Average probability of losing job in the next 12 months by educational entertainment. The moment of intense uncertainty. Rand is trying to build up a consulting business. Blah, blah, blah. Okay. Dude, consulting's going to be hard in the day of AI. That's going to be tough. Yeah, somebody here writes, $5 donation. If an order book and volume is low enough, you can also technically make a stock jump by buying one share. This is correct. This is absolutely correct. And that's when money could be created out of thin air, right? That's what I'm saying. Like, it cuts both ways, right? So I'm not saying it's just bearish, but I am saying, like, money, that's why down markets are so bad. Down markets are so bad because wealth literally disappears. That's why up markets are so fun, because wealth literally comes out of nowhere.
Given that Blue Owl has backed Oracle's 2 other projects, Texas and New Mexico, Oracle does confirm to CNBC that yes, Blue Owl won't be in this deal with Michigan, but adds that its development partner, Related Digital, is in final negotiations with a competitive group for their equity deal, and that it's on schedule and according to plan. But as you shared, the market is not taking this news kindly. The stock is down another 4% because it raises new questions, right? Clarity on who the backer of this $10 billion Michigan data center will be. Any suggestion that this data center expansion will be slower than expected also then brings up the whole question around this $300 billion deal that Oracle has with OpenAI, which at this point is still its main customer.
Yeah, never did you imagine you'd be, following every in and out of this story as it develops. But we'll continue to talk to you. Appreciate your reporting, Seema. Thank you for that. That's Seema Modi. Jason Snipe, you own Oracle. And from best I remember, we haven't heard from you on this name. Give me something.
I mean, it feels like it goes down every day, right? $600 billion, roughly $600 billion.
Somebody's asking me to zoom in to 77 to 97 on gold. This was during the inflation panic after we left the gold standard. This is when we left the gold standard. Here was, I mean, look at this skyrocketing from 77 to 97. And that's still pretty good. You know? Yeah, it's very impressive when we left the gold standard. Silver about to hit 6-7 today. Let's go. Yeah, I try to bother my kids now with that. Like, I was leaving comments 6-7 yesterday on X, and they were just like face palming. They're like, Dad, it's not cool if you do it. And I'm like, all right, let's do a summary of this. I got work to do for House Hack. I actually got a lot of work I gotta do for House Hack, so I gotta get to work. I get to get my job. Ugh. All right. Okay, so how are we gonna do this? Let's do this. Okay, wait. We were looking at the Rabobank piece. I don't think there's anything interesting there. We were looking at the Oracle yapping. Right, we're gonna look at that. Kevin, that was just about Kevin Warsh. We know that guy's a moron. Okay, we've got nothing on data centers here. JP Morgan, I hate JP Morgan. Bad bank. JP Morgan, labor market still struggling to maintain traction. Okay, let's look at this. Oh, this is a Wells Fargo piece. Good. Anything but JP Morgan. So we'll look at that quickly. And then JP Morgan, they don't have anything useful. That's pretty much the same as their bank. And then, do I dump on JP Morgan enough? I don't think I do. I think I need to make it a little bit more clear. But anyway, labor market is still struggling to maintain traction. Today's unusual double employment report showed that the labor market remains in a precarious position. October's non-farm payroll declined by 105,000. But it excluding the federal sector, employment growth was only 57,000. November grew at 64K. The unemployment rate rose. So is it possible that there's some additional volatility in the household survey due to the government shutdown? So we'll be looking for December to be released DC9. Labor market has been softening. We doubt today's data is enough to get another 25 BCP cut for January. Right, well, that'll be the next labor report. Still softening, still struggling to maintain its footing. That's not great. And then we've got 11K downward revision, Stark, October drop in employment. Largest drop since 2020. It overstates the recent loss of momentum in hiring. Federal employment plummeted to 162 as workers who accepted the government's deferred resignation were rolled off payroll. Yet, even when getting aside the special factor in October, the soft picture of job growth remains. Non-farm payroll is up just 0.6% from last year. The breadth of hiring has improved slightly, but employment gains continue to be driven by healthcare and social assistance. More cyclically sensitive sectors like manufacturing, financial services, leisure, and hospitality all posted declines. Softening labor market is becoming increasingly clear in the labor or in the unemployment rate. Right. All right, we get it. We know this. Okay. All right, perfect. So let me close that. Anything else from Rabobank over here on the Kevin piece? Not really, because they're yapping about payrolls. So I'm gonna get rid of Rabobank's piece. So we don't need that. And then we have private credit poopy doopy. We saw that. Then we've got more mega cap divergence. Let me take a look here.
Right? Mm-hmm. Why'd you do that?
Tax loss, really. It's not an indictment on the business. You're seeing some encouraging signs there of AI integration. We recognize we're swimming upstream, though. There's still this narrative out there that they are going to get this.
Oh, shout out to those of you just recently here joining. ADAL, Meet Kevin membership. Suki, Reinvest lifetime membership. Steven, Reinvest lifetime membership. For Reinvest AI, Patrick, Reinvest AI, Brendan, Meet Kevin membership. Somebody named Enrolled. No name. They didn't put a name in. It just says blank enrolled in Reinvest AI. It's going to be hard to greet you. Reinvest AI, Cade, that sounds like a girl name. Cade. Reinvest AI, David, Reinvest AI, Meet Kevin membership. Let me go to, let's take a Google here. Cade. Yeah. Cade? Is it a guy name or a girl name? I don't know what it is. It doesn't matter. Okay, let's go to. We got this labor market struggling to maintain traction. We got that from Wells Fargo. We got the Kevin. We got Bitcoin slipping. We've got, let's go look at The Economist here, where the prominent short sellers are betting. Let's take a look at that. Somebody says, what's Reinvest AI? Wow. Wouldn't I be honored? I donate because I have a shit ton of money. Oh, thanks, Jonathan Stonks. Will you go invest in Reinvest? Reinvest AI is house hacks AI, right? You can see it here. Just go to househack.com or reinvest.com. We're releasing this AI app this month, and it's all about helping people look at real estate based on how much it could have changed their net worth. And we sort of have development phases for it. You can invest in the company too. We're closing the fundraise for it at the end of the month. But anyway, okay. So let's go back to The Economist. So The Economist has, I have to giggle, says Jim Chanos, if investors are becoming overly optimistic, data centers, we're at data center space stage of the cycle. Right. Yes. That's something we will only be able to tell in hindsight if we're in a bubble. You might think short sellers who bet on prices falling rather than rising, you're looking forward to a bonanza. And there's no end to juicy targets to short. Shorting's tough, man. That's a tough way to make a living. Rational exuberance, blah, blah, blah. American households have more to lose than ever before. Well, that's true because of the percentage of wealth tied up in stocks. That would be bad. Can you invest if you're from Ireland? Yeah, you can. Yeah, you can invest if you're from Japan, China, Canada, Italy, Germany, Ireland, whatever you want, except for Bulgaria, North Korea, or Iran. Probably not Russia. Pretty much just, you can't be sanctioned. Sorry, Bulgarians. I don't know why they wrapped you into that list. I think it's like a way to take this out against Vlad or something. I don't know. Average account on Robinhood holds $12,000. We're way out on the risk spectrum. Huh. Yeah, all right. Whatever. All right. So, okay. Chip sector today obviously is what's getting hit, specifically with CoreWeave. Though it's trying to recover a bit here. So maybe we found a bottom. But why is this hardware sell-off continuing? That's what we got to talk about. Let's listen. Oh, look, they're talking CoreWeave.
And I think we had that report yesterday talking about that. So you have, when you think about moving forward into 2026, you say to yourself, well, what are the names I want to own? It's the names you're talking about. It's the Mag 7. It's what you bought, NVIDIA, right? Because why? It's offense and it's defense. But yet they continue to go down in an environment where the market's correcting. That's telling you that the market just wants to reduce positioning and work off some of that bullish sentiment. And I think that's what we are faced with right now. We are too bullish on risk assets moving into 2026?
Well, I see volatility. Just one more, I'm sorry, one more point is that we were at a point where a rising tide lifted all ships. Those are generally moments in time. The rational markets, which I believe is what we're getting to now, is where you separate the winners from not winners, right? Not necessarily losers, but the ones that will be the permanent compounders.
I should also remind everybody we're only 2.4% off of an all-time high on the S&P.
No, agreed.
So before we declare everybody's too bullish and whatever, just
and
keep this whole
positioning.
thing
You can be
perspective.
2.4% off an all-time high. You can reach an extreme in bullishness.
Hey, let
That's
me say this, though. The data doesn't support that. Look at Deutsche Bank consolidated positioning. It's at the 60th percentile. So people might be saying they are bullish. The positioning is not reflecting that. Valuations do, certainly, but positioning is not reflecting that. In the household market, it does. Households are fully invested. So there's always room for institutions when you have these fundamentals recalibrate. And when you look at what's supposed to happen next year to drive this broadening out trade, I would just ask you, do you believe that can happen? Or do you more believe that some of these hyperscalers and the investment theme that's happening here can continue to persist? Are we going to extract all these benefits of efficiency that we're supposed to see in every other business? Do you really believe that? Do you really believe that small cap, which was supposed to grow at 40% this year and grew 6%, is going to grow at 50% next year when 40% of the companies are unprofitable?
Let me say,
how's that work?
I do believe that we will.
Oh, that's awesome, Macy. Yeah, hey, hit us up. I know we're looking to hire. We've got 2 slots we're looking to hire. If you email, just email staff@meetkevin.com. You can send an app over. But yeah, we've got 2 slots we're trying to hire for dev. We were thinking about starting to hire Jan 1 because it's kind of a weird time to like put out job application or job postings December 17th, but whatever. All right, who's ready? Let's catch up what's been going on. All right. Well, the market's selling off again because of hardware companies yet again. It's always the data centers. And yeah, we might be at the data centers in space moment, but people are now asking if no, not the canary in the coal mine is dying, but the owl in the data centers is dying. All right, let's explain. All of this has to do with the drama going on with Blue Owl. Now, a lot of people say this is not fair, this Blue Owl drama. Everything is fine. Everything is on schedule. There's nothing to see here. In fact, that's literally what Oracle is arguing. Oracle says, hey, don't worry. We are in the final stages of our Michigan data center. Everything is on schedule. We don't need the help of Blue Owl Capital. So screw Blue Owl. We're good. Please don't sell Oracle stock. Okay, so that's the premise. So Oracle is freaking out because their stock's down like 5% on the day because markets are selling off that Blue Owl doesn't want to touch Oracle. Okay, so here's Oracle stock. Down 5% on the day. Zoom out on the day chart. It's not a really pretty chart. We're basically going full circle on this, and it's taking CoreWeave down, it's taking NBIS down, it's taking IREN down, it's taking AMD down, it's taking NVIDIA down. It's taking the whole damn sector down, which naturally is taking the Qs down, which is unfortunate because the Qs have actually been seeing a broadening out. Seeing a recovery in stocks like Target. Enphase has even been recovering. Trade Desk is trying to pop a little. You're seeing some movement in stocks that used to be dead. But the weight of these big mega caps is pushing everything down. Now, why? What could be going on here? Well, what's going on here is people understand that when liquidity dries up, growth rates collapse. And that's the concern. Remember this Kevin Warsh piece here. April 14th, 2008. Kevin Warsh. The financial market turmoil in the Federal Reserve. The plot thickens. What does he talk about? He talks about liquidity. And he literally talks about how there was a liquidity shock last August and a, quote, global margin call on virtually all positions. What he's referring to is when BNP Paribas had to cancel valuing funds that created a credit shock and a seizing up in private credit. Now, why does that matter? Why does anybody care? Well, I wrote this out for us to make this very simple. In 2007, liquidity dries up in August of 2007. The Federal Reserve panics and starts pumping liquidity to try to pump up these private credit markets in early 2008. However, the Fed doesn't do enough, and they end up being too late because they're worried about inflation. And as a result, the global economy collapses through the Great Recession, starting with the collapse of Lehman Brothers and, of course, all the warning signs before that. Mind you, where we sit today is, yeah, liquidity's drying up right now, and the Fed literally is panicking right now. We just printed billions of dollars on Tomo, and we're printing money for Pomo. And so why does this matter? Well, it all matters because Oracle's growth is projected to be 33% next year, the year after that, the year after that, and the year after that. An average of 33% for the next 4 years on average is predicted. But the problem is, all of that growth is predicated on them being able to finance. They just turned negative cash flow. We just saw their cash flow go to negative $10 billion. And Blue Owl has been a reliable financing partner for them in the past. Look at this. Blue Owl financed a $15 billion data center for Oracle in Abilene, Texas, and an $18 billion data center in New Mexico for Oracle. The fact that Blue Owl is now bailing on these deals is raising a red flag. Why would Blue Owl, who makes a living off not only financing Oracle's data centers, but also financing Meta's data centers, all of a sudden bail? And that's why markets are skittish today. Now, Blue Owl says, hey, you know what? We were going to finance money for this 1 gigawatt hour per hour data center in Saline, Michigan. But, we decided not to do that after negotiations stalled. The private lenders, basically, like Blue Owl, they're like, we're going to need some better terms because things are getting a little spooky out there. Oracle CDS has just jumped to 150. We were 128 on the 2nd. We were 134 on the 12th. Here we are on the 17th, we're at 150. It's starting to get a little weird out there. We keep going in the wrong direction on the step. And so Blue Owl's like, oh, no. We're going to need some better, guarantees that you're not going to burn us. And so apparently Blue Owl's like, JK, you know what? We're not going to do the $10 billion deal with you when they've previously done a $15 billion deal and an $18 billion deal with Oracle. So basically, a cash well that used to be valuable and reliable for Oracle is now not valuable or reliable. Now, part of that could be because Blue Owl is getting sued. Blue Owl is getting sued in a class action lawsuit. The class action lawsuit, as they usually do, claims that Blue Owl is experiencing meaningful pressure on its assets from business development company redemptions. As a result, the company is facing undisclosed liquidity issues. You can actually see the chart of those liquidity issues because if you look at some of the Blue Owl funds, you can see the price to book value of some of these entities is actually trading at 80 cents on the dollar. So, you're taking a 20% loss. This is the week chart, by the way. Here's the day chart. You're taking a loss on actual net asset value on some of these Blue Owl funds. So there could be two things at play here. It's possible, and this is the jaded version of Kevin. The jaded version of Kevin says Blue Owl they're in a lawsuit for liquidity issues, and they're giving away money or lending money too easily. Their private credit books are falling apart. They're selling at a discount to NAV. Their attempt to salvage that collapse by buying their own stock and then eventually still giving up on the merger. Blue Owl calls off merger between private credit funds, inflicting losses of 20% on investors, right? This is all an attempt by Blue Owl to go, hey, we're gonna try to pump up our own stock. You know what? We'll lend a little less. We got to deal with this class action lawsuit. We got to deal with investors bailing on us now. You know, maybe we'll pull back a little bit and try to signal, no. We're being safe. We're being scrupulous. You know, this is kind of like what banks do as well, right? Like banks do this as well. They're like, okay, guys, they'll have their little huddle up meetings and they'll be like, we need to kick out 10 people from the bank, like customers. It could be Donald Trump or whatever. You know, we've always heard about him with debanking. And they don't necessarily tell you why they kick people out. They just do. And the way they do that is they can hide under the attorney-client privileges at banks. And the whole intention is to conceal why they actually kick people like Trump out. And it can never come up in discovery because attorneys are in the compliance departments. That's how Trump gets screwed out. That's how that information never shows up in compliance. But the point is, the bank turns around and brands, nope, see, we kicked some people out. We are being smart and prudent with risk taking. That's the same thing as Blue Owl, in my opinion. I think that Blue Owl is bailing on this Michigan data center because Blue Owl is trying to say, hey guys, hey, you know what? No. Too much risk at Oracle. We're going to be prudent and we're not going to actually lend to Oracle. Even though we've already lent them $15 billion and $18 billion, we're just not going to lend to them again. That's the red flag because now people wonder, well, crap. If Oracle has negative free cash flow and they rely on debt to keep expanding, well, they look cheap based on these growth rates. But wait a minute, if they don't get their financing, their growth collapses. This is really bad, right? Well, let's see what their buddy CoreWeave is saying. Because remember, we already talked about how Oracle is saying, hey guys, why don't you just bring your own chips to our data centers? We're kind of running out of money to finance this all. Please? Bring your own chips? It's crazy. It's bad, right? For some transparency, by the way, just on my positioning, by the way, we have that, we did like a coupon for 2 hours, a special one called W Tony because of Tony in the live stream. Shout out to Tony in the live stream. But just a little bit of transparency here, just on my positioning, I want to show you CoreWeave. So, and that'll work on the Reinvest AI at househack.com and the Meet Kevin membership, the Alpha Report. But anyway, some transparency on Alpha this morning. I've been talking about weakness in hardware for a while, and I haven't said this publicly yet, but I sold about $2.5 million of NVIDIA between 180 to 205. So some of my sales were at 205, some were at 200, some were at 195, some were at 190, some were at 185, some were at 180. And I sold about $2.5 million of NVIDIA. So I'm just making that public now, and this has been known to course members for, over a month now, that, I've started selling my NVIDIA. I'm not exposed to these data center plays. I don't have any shorts in these plays, so I just want to be clear about that. But I've also been saying that this hardware risk is a problem because it's a big part of the Qs. Now, I was hoping because of the 607 bounce yesterday that we would actually continue to bounce slowly on the Qs, but it's actually bad because we just lost 607. I hope we can regain 607, but the weight of what's going on at Oracle, CoreWeave, NBIS, IREN, AMD, and NVIDIA is very heavy. Like, this is heavy pain. We actually don't have a lot of bad catalysts between now and January 9th. It's just the data center stuff. That's why paying attention to this data center stuff is really important. Look, by the way, at what gold and silver are telling you. Gold and silver spiked when we had the private credit panic in 2007 over here, and then spiked when we had QE. And look what we have now. This should tell you about the private credit plummet, or the risk that we're seeing in private credit, right? Because gold is skyrocketing in part as a proxy to private credit risks. Keep that in mind. Now, something to watch. Go to CoreWeave's investor relations docs. You go to CoreWeave's investor relations docs, you're going to see a few things. So let's start at the top. So here's their last earnings call. And what does CoreWeave tell you, who's another, financing developer? First, they're like, hey guys, don't worry. Our debt doesn't mature until 2028. Keep in mind, 2028 isn't that long away for long-term financing. This is not like 30-year fixed rate financing, right? And then they're like, guys, don't worry. These delays in data centers are temporary. Keep this in mind. these delays in data centers are problematic not just because they slow down financing, but you're also in part getting delayed because of stuff like this. Look at this. Detroit Metro Times. Residents raise alarms over environmental risks tied to massive data center in Saline Township. Right? And so what you see is state regulators are facing increasing pressure to slow down a $7 billion, 2.2 million square foot data center proposed for rural Saline Township, where residents and environmental groups warn the project would destroy the wetlands. And then, of course, they get into talking about energy as well, right? Like energy slowdowns and stuff. Oracle, like CoreWeave's also complaining about its data center slowdown because I guess they couldn't pour concrete because, oh my gosh, it rains in Texas. Imagine that. But like the fact that we're getting so granularly worried about, frankly, not being able to pour concrete for our data centers causing delays, the fact that that is making news is a sign that this financing for these companies is really sensitive. And so, of course, in their earnings calls, they're like, oh, don't worry, these delays are just temporary. Everything is fine, guys. Everything is fine. So if I scroll down a little bit more, what do I see over here? You see this NVIDIA contract in our revenue backlog, okay? So NVIDIA is providing financing by underwriting some of the computing infrastructure, okay? We already knew that NVIDIA backs CoreWeave. NVIDIA has a 7% stake in CoreWeave. But here's what's more important. Look at this. How do you think about your path going forward between the different ways of funding your business? It's all about funding your business, right? And I always say you should think of a red flag when you hear things like, what about creative or innovative financing, Kevin? Like when I hear people do these deals in real estate, we don't have creative financing for our real estate. We have no bank debt for our real estate. We don't have any debt on our real estate. When I hear creative or innovative financing, I think very high risk. Financing shouldn't require innovation. If you had a 30-year fixed rate mortgage on data centers, would you need to innovate financing? No, you'd be happy. Instead, what do you have? You have the following. Thank you. Here's the CEO, okay? Mike. So look, we've driven innovation on the technology side. We've driven innovation on the financing side, right? Ho, ho, ho. The way I look at this is, well, we will look at the full suite of potential ways of financing and expanding our footprint. And we will choose whatever is the most cost-effective way of increasing our scale and serving our clients. So, if we need to start leasing instead of building data centers because we don't have the financing capabilities, well, then that's the path we'll go with. But we've seen a lot of different structures. We've created a lot of different structures that have given us access to capital over the last 3 years, and we believe we're going to explore the full suite. We're going to explore the space fully with more cowbell, and we look forward to those deals. Everything is fine. We don't do deals unless this financing is already spoken for, so everything is fine. Yeah, that's why, okay? Why, folks?
It's because that's why.
That's why people are nervous that when Blue Owl bails on financing, that everything starts looking a lot less stable. I tweeted a response to this. It's no surprise CDSs are going up as well. I quote tweeted Bloomberg, and I wrote, unpopular opinion, OpenAI is running on fumes and will promise to use anyone's chips in return for an investment. I hope I'm wrong. Sam Altman has the power to single-handedly push us into recession. And then, of course, there were some additional comments about like, hey, why doesn't OpenAI scale back on like some of their costs by cutting back on free user exposure? And I'm like, the problem if you do that is that if you cut back on your expenses because of data center issues or whatever, then new user growth tanks and then new investments would vanish. Keep in mind that Oracle right now, or OpenAI, like what we quote tweeted here, OpenAI is in discussions to raise $10 billion of investments from Amazon and use the online retailer's AI chips. Yeah, because they need to. They need to take money anywhere they can, and they're willing to make any promises they need to. Waller this morning said, thank goodness we're hearing Waller and Trump talking. Waller is a way better choice. But we're hearing Waller talk about the labor market being very soft and that rates are potentially still 1% above neutral. That's a big problem. That means we have a lot more rate cuts to do, that Waller is legitimately fearful about the labor market. Wells Fargo, anybody but JP Morgan, Wells Fargo is suggesting the following. Look at this. Wells Fargo says, the last labor market that we saw indicates the labor market is still struggling to maintain its footing. We just saw the worst October drop in employment since 2020. And the labor market is only up 0.6% from last November, driven by healthcare and social assistance. This is scary. This is a really big problem. You know, and this is why, like, I made a call this morning, and I'm not trying to frustrate people on this, and yeah, I did just put the reinvest banner up, but I made a call this morning in the Alpha report when Tesla was, you know, 490 or whatever it was over here. I made a call this morning in the Alpha report, and I said, it is time to be prudent on Tesla. Like, I'm going to be very transparent about this. I said that in 2011, I wish somebody would have grabbed me by the shoulders and said, Kevin, it's at record highs. You have trash for catalysts ahead of you. The market is at a precarious point. I wish somebody would have shaken me and said, this is a great time to sell some calls or take some profits. This morning, in the course member Alpha report, we talked about selling calls and how if you sold, what was it, like April or May calls, you could literally be selling Tesla shares effectively with a premium you're getting for like $550 because you're getting paid like $60 on some of these sell calls. You know, obviously, if you sell calls, the risk is that the stock declines even more than that. And that's, of course, why, you know, the sell call premiums are so high. The sell call premiums are very high, and volatility is not even high on Tesla right now. The 5-day and 10-day moving average for volatility on Tesla is actually below average. But anyway, I'm like, please, like, diversify. And so, yeah, I mean, obviously, I'm a little biased. This is where I get biased. I'm biased, and I think that a great way to diversify right now is investing in either, like, take from some of these individual stocks, have some money in cash, pay off debt, or, shameless plug, go invest in something like House Hack. You know, no bank debt. It's literally backed by real estate. Did you see the Michael Burry piece on real estate? Let me pull up the Michael Burry piece on real estate. Michael Burry just talked about usually bad things come to the stock market when you have household wealth lower, or real estate as a percentage of net worth lower than equities as a percentage of net worth. The last time that happened was in 1998, and then it happened in the 60s, both of the times right before bigly recessions. Michael Burry was talking about that. And so then real estate normalizes and becomes a greater part of people's net worth. I personally think that aligns almost perfectly with diversifying into a real estate company. On top of that, obviously, we have our real estate AI, which you could join if you want. We have our release schedule of what our AI is and everything at househack.com or reinvest.co. But yeah, I mean, if you click invest in the company, you can invest. You get 5% as a yield paid through conversion, plus all of the upside in the stock. It's real estate backed. You invest with a credit card, ACH, or wire, no fees. If you want, I don't obviously recommend you go in debt. Read the offering circular. There's risk with every investment. But I think now is a great time to look and go, yeah, dude, there's serious. Well, here people are apparently taking the advice. They got a giant red candlestick there on Tesla. But no, I think it's a fantastic time to look and say, you know what, this is why I made my video yesterday about Tesla. Like Tesla's due for an imminent collapse, I wrote yesterday. And it's not because I'm bearish Tesla. I love Tesla, but it's just I want to send a message that I wish in 2021 somebody did that for me and said, like, forget House Hack for a moment. Go, like, just diversify. Just pay off some debt. Just be a little bit more insulated for a crash. That's it. Anyway. Okay, so let's go back to this Oracle piece for a moment. Let me get rid of this reinvest banner. So if I go back over here, what do we have here? The AI market is propped up on growth estimates that rely on debt expanding. You mean 2021? What did I say? Yeah, I meant 2021. Yeah, sorry. If I said 2011, you know what I mean. It's 2021. You know, but I'm not going to go back and fix that in editing. You know what I mean. This AI market is propped up on growth estimates that rely on debt expanding. Right now, we are seeing debt contract, right? That's the problem. That's why. And you know, the reason we did the W Tom thing is because, like, this isn't to dump on, it's not Tom, it's Tony. It's Win Tony was what it was. That's what we did. W Tony. We made a special coupon for Tony because Tony said, hey, you know, if somebody sells, like, somebody gets that money, right? Like, the money goes somewhere. And I make the argument that no, it evaporates. And this is why down markets are so bad. Because at the same time, markets can go up and we generate wealth out of thin air. The same thing happens on the downside, and people forget this. So we made an example here. Let's say you have $1 million of Tesla stock at 480 or 490 or whatever. And then there's some kind of shock. Lehman Brothers, bank failure, liberation, whatever. Now all of a sudden, there are no buyers until 350. And then one jerk-off sells Tesla at 350 and one jerk-off buys Tesla at 350. Now all of a sudden, the last reported trade is $350. You just instantaneously, on your $1 million position at Tesla, lost 27% in net worth. So the point is, in down markets, money evaporates. And if right now we're in a market that is propped up by debt, and the debt is starting to tighten, that's bad. Why is the debt tightening? One of the reasons, people are worried about regulation. Another reason, people are worried about lawsuits. You know, we just saw that Blue Owl is getting sued. But on top of that, look at this. First Brand's collapse ripples through private development corporations. They're all shaking in their boots because of this. On top of that, you now got the regulators after them. Financial Times, U.S. prosecutors charge Tricolor executives over systematic fraud. Both First Brand CEO is probably a fraud. Now they're charging the Tricolor folks with fraud, which means everyone like Jeffries who lended to them, all of the lenders are now under the radar of the SEC investigating them because they're like, why are you lending to these people? I kid you not. Look, Reuters, U.S. SEC. Oh, freaking Reuters. U.S. SEC investigates Jeffries over First Brand's collapse. That's how credit. Oh, here, I meant to put it up. That's how credit starts tightening. People get nervous about regulation. They get nervous about lawsuits. They get nervous about all the crap. The Economist makes it pretty clear. The reason to fear a bear market is that American households have more to lose than ever before. Stock ownership accounts for 30% of their total assets. Now, don't get me wrong. I'm not trying to say I'm like a mega bear. You know, we made this bear bull chart in the course member live streams, by the way, just so we could kind of track where I stand with the, bear bull bullishness or whatever, right? And so if I go from, where is it? Here, got it up. If we go over here to the bear bull scale, I actually make my notes as to where I am on the bear bull scale. And I'm still sitting mid-range. You know, I put my notes over here about, what's bearish or what's bullish or why I'm revising. You can see I've been mid-range, I actually went really bullish right here on November 19th. And that's also when I made a video on the channel called Buy. And the market from November 19th through like December 10th, which is what we called, was like straight up. Right? But then of course people are like, but your titles are flip-floppy. It's like, no, man, like I literally break down exactly what I'm looking at every single day. And now we're tracking it too. So you can see it's actually pretty stable. The reason I'm bringing all this up is because the problem is people are asking me, Kevin, Oracle's peg is so low. Isn't this a buy the dip opportunity? And the question is, it's only a buy the dip opportunity if you believe they can achieve their growth expectations. If financing stops, the growth will plummet. So you have to realize some companies are exposed to requiring more financing to grow. A company that sells an AI product or a SaaS product doesn't rely on financing, doesn't rely on selling stock or raising money because the cash flows are so high. Like our margins are huge from the AI that we sell. It doesn't have to be us, it could be any AI play. But if you're SoFi and you have to issue shares to make loans, that's tough in a down market. If you're Oracle and you have to rely on financing, that's tough in a down market because you're negative free cash flow. That's all. It's all just designed to be an education around, in a down market, private credit compresses. And when private credit compresses, valuations that look cheap might not actually be, because then their PEG ratios skyrocket, and so you actually end up buying something very expensive. So that's where I'd love, and I have a little bit of exposure to Meta, so I just want to be clear about that. That's not a lot, but I have a little bit of exposure to Meta. It's one of the reasons I like Meta. Not saying they won't go down if everything goes down, but one of the reasons I like Meta, or even Netflix, I think the Netflix sell-off is a steal. I think that's a buy. Again, I'm not trying to you need to only buy my stuff. I give you other opinions too. I think Netflix is a steal because they don't rely on issuing stock to finance their business. Now, in fairness, they are taking on debt to do the Warner Brothers deal, which I think they're going to get. The Kushners have backed out. Paramount's going to get rejected. Warner Brothers is going to push to reject the Paramount deal. So I think this, Netflix is going to be a behemoth. They're not relying on issuing stock or debt to keep going. The acquisition does have debt, though, so there's an asterisk there. But broadly, if you look at the financials of Netflix, outside of the acquisition, they don't need to take on debt or financing. They buy back stock. The same is true of Meta. Meta, what I love about Meta is that Meta actually went to Blue Owl and got $27 billion of data center compute with the rights to cancel at certain intervals. I think it's every 4 years. And Meta's not going to hold the data center bag. Blue Owl's investors are, which is exactly why we go full circle to the Blue Owl Development Corporation selling for, in this case, this one's selling for 87 cents on the dollar. Blue Owl Technology is selling for 20 cents on the dollar. And the performance hasn't been, 80 cents on the dollar, 20% discount. And the performance of these hasn't been that great because people are nervous about private credit. So, there you go. That's I think, an exhaustive breakdown of what's going on here. Somebody says, Sam Bank-ass freed. Yeah, you're relying on continued capital inflows, in his case, to fund his fraud, right? Let's see. The judge actually ruled in that Sam Bankman-Fried situation. The judge issued a ruling and said that people could not have known that they were a fraud. They were so secretly fraudulent that nobody could have known. That was very interesting. I saw that. So he says, will House Hack pay dividends when it goes public? I don't know. I think sometimes people ask me these questions. They're like, oh, well, what are you going to do in 4 years? I don't know. Somebody asked me earlier, that's actually why I wrote this down. Somebody asked me earlier, hey, Kevin, are you guys going to finance if there's a crash and rates go to zero? Maybe, but here's the problem. You only want to finance this. Write this down. If you don't watch another video from me and you're like, I'm done with Kevin, unsub, dislike, fine. I still love you, but please take this with you, okay? Take this lesson with you. Debt is great when the Fed goes to ZERP, okay? Oh, that's not a good color. When the Fed goes to ZERP, debt is great. And there's inflation. So you need ZERP and inflation, because inflation makes your debt cheaper to pay off. So you want ZERP and inflation. However, if we're at ZERP and deflation, you don't want debt. You don't want to make these promises. That's crazy. You should never make promises like that. 1K in House Hack or 1K in Reinvest? Well, they're the same company. Okay, I'm just going to be transparent about this. The reason I like Reinvest, for a few reasons, okay? One, Reinvest, if you write it out, it kind of stands for real estate invest, right? But in the future, there are a few things we want to do with Reinvest. Not just the AI, but in the future, in the long-term future, what we're kind of thinking about doing is enabling people to reinvest in real estate through stable coins by basically, put real estate on blockchain, but not just real estate, certain real estate, also loans, no guarantees. This is all in the future. Also loans, right? So if you use our AI, you ideally, in the future, swipe up and get a loan on chain instantly through the Reinvest app. And then if you want to, reinvest your profits or whatever, you could you can do that all through the app. This is an ecosystem that we're trying to build. We're really, really early days on this. So none of this is obviously guaranteed. It's just, but that's why. People always ask, Kevin, why the name? It's like, okay, well, because I think it flows with all of that. You know, if you open up the Meet Kevin app right now, it actually, when it loads, it says reinvest with Meet Kevin. I think it's kind of cool. So anyway, all right, good. So good luck out there. I love you all. Stay safe. I'ma go. But before I go, thank you so much for being a subscriber of the channel. Love having you here. And we'll see you in the next one.